CNBC is on assignment in Washington, D.C. as the world's central bankers and ministers of finance gather for the International Monetary Fund and World Bank Group annual meetings to debate the global economic outlook, economic development, and the impact of unprecedented geopolitical and macroeconomic turmoil. I'm Karen Cho at the IMF World Bank annual meetings in Washington, D.C. I'm going to bring you highlights from our coverage and any of the big interviews that you may have missed. The biggest message from the IMF World Bank annual meetings is clear. Geopolitical and economic uncertainty, in particular trade tariffs, are weighing on growth.
Back in April, when we were putting together our projections for the year in the middle of an unprecedented increase in tariffs from the US on the rest of the world, we had a range of scenarios. The situation was very fluid, and there was a downgrade in growth, and it ranged from modest to significant. And so now, 6 months later, where are we? And our answer is, well, the good news is we're kind of at the modest end of the range. So that's the good news. It doesn't mean that the tariff shock has had no impact. We can see the impact of the tariff shock in the US and elsewhere. But private sector has adapted. There was a lot of rerouting of supply chains, import front loadings in the first part of the year. The tariff shock itself has been scaled back. There were trade deals, many exemptions. The effective tariff rate that we are calculating now is slightly under 20%. It was projected before to be around maybe 25%. Now, close to 20% is still elevated. It's still a high tariff rate from the US and the rest of the world. And then there are a number of other things that have helped the economy do better. Financial conditions have remained very accommodating. We're in the middle of a very strong tech, AI-related investment surge. Fiscal policy in a number of countries is basically giving some more fuel to the economy in China, in Germany, in the US next year. So you put all of these things together, and our growth number is actually very similar for 2025 to what we had a year ago, 3.2%, even if we expect a little bit of a slowdown next year to 3.1%.
Well, just as you dust off your report, we have the US and China escalating on a trade war. How big a worry is that still as we count down to the end of the year?
Well, it's a stark reminder, if we needed one, that we're in an environment in which trade policy uncertainty is with us. There could be flare-ups in trade relations. They could be very damaging to the global economy. For instance, we did a downside scenario in our report where we try to factor in some of these tensions. Of course, not the specific details of what's happening between the US and China right now, but sort of thinking about what could go wrong in the trade space. And it's easy to get global output coming down by 0.3 percentage point this year and next if we have trade tensions that are escalating again. So this is really an important reminder that we need to achieve clear, transparent trade agreements, bring back stability, restores transparency, allow businesses to make plans without fearing about how they might be upended in the future.
Australia's interests are best served by more trade, not more trade barriers, and that's the approach that we take to this. Yes, we have the lowest tariffs from the US around the world, and that's good for Australia in comparative terms, and most of our trade goes elsewhere. But we are concerned, we have raised our concern over the course of recent months about the impact on the global economy. The global economy is obviously going through a period of great uncertainty. The tariffs are part of that, but not the only source of that uncertainty. The job for Australia is to make sure that we continue to be the beneficiary of well-functioning, open global markets for our amazing goods and services.
Are you worried that the United States and China are looking to escalate again before any negotiation?
Well, obviously the whole global economy is watching very closely what's happening between the US and China. Again, it's our view that nobody wins from a trade war, that tariffs are ultimately self-defeating, but clearly we're monitoring what's happening. And I think it's noteworthy that in a week where we saw a very substantial de-escalation in the Middle East, we saw an escalation of trade tensions between the US and China, and that's obviously of great concern to everyone gathered here in DC.
What's your view on the timing around the tariff impact? Because it's been very slow to translate, and if you've noticed some of the product diversion taking place now, is there still more to come?
I guess most economists, including the IMF, where we speak from, agree that the negative effects on growth and the increasing effects on inflation are deferred. They did not disappear, and there are various reasons why it came later than expected. Probably one of the most important reasons is that there was some front-loading on imports in Q1 before the tariffs. But it remains bad news. Let me stress that in other parts of the world, and take Europe, we have the negative effect on growth. We don't have the increasing effect on inflation due, as I said, to the fact that we didn't retaliate.
I think over the last 10 months we were confronted with so many uncertainties. And the tariff discussion and the decisions around tariffs, this is one of these uncertainties. So at the end, I believe this whole situation is not helpful to the economy and how we try to evaluate what is of importance, especially when it comes to monetary policy. And yes, this is producing a lot of, let me say, it's producing a lot of uncertainty. So the whole tariff discussion between China and the United States, what was the, and again, coming back to the discussion we had around the tariffs discussion between Europe and maybe also here the United States, I do not see where are the winners for all this. It looks like to me that it's a lose-lose situation for really everyone.
So trade contributes to this policy uncertainty at the moment. I think we are in a better place than we were in spring, where the uncertainty was very, very high also between the European Union and the United States. The deal that has been struck creates some certainty about the future, but the problem with trade data at the moment is that they are quite volatile and there's some front loading, so it's quite difficult to interpret what we are seeing. At the moment, we see less of an effect of the trade conflicts in the data than we expected. That's true for the European Union, but also true for the US in the price level data. I would not bet on that this stays on like that. There might be changes that only trickle down over time, but we'll have to wait and see. And you're absolutely right. These trade diversion effects that we might experience through Chinese trade rerouted to the European Union, that might affect, of course, also our inflation expectations.
Well, so far we have not seen any major or significant impact in terms of our trade figure, but it's also true that it's a bit soon to have a full extent of the impact of this increase in fragmentation and this increase in tariffs. We will be monitoring very closely for the next few quarters as well, but there's a lot of distortion in the data. First quarter there was a lot of accumulation in, of course, anticipation of the tariffs. Then we have to see actually what happens. Also the direct exposure of Spain is rather limited, around 5% of our total exports, more indirect exposure throughout our trade with main EU partners like Germany or France, but so far it's been contained. And in any case, in a preventive manner, we put together a specific support program for our companies so that they can navigate in these very uncertain times with financial measures to help them, but also with a lot of information and intelligence, economic and trade intelligence, so that they can take advantage of these opportunities as well at this point.